Well, thank you, Nere. It's a lot. But literally, I think this story is very interesting. I hope someday definitely we will go through it. But it's a long journey. And it also tells that, the problems that startups face in this country and unfortunately in our region. But anyway, sorry about this distraction. Yeah, I need to press this, right? Yeah, okay. Good morning. Good morning, everyone. Good morning, distinguished guests. Um, Representatives, of course, from CBN, AFC, Afrexim, Chapel Hill, AFDB, ministries. It's really a privilege to address this gathering of innovators, visionaries, and of course, policymakers. Let me just start by stating few facts, recent facts, right? So we saw last month gold crossed 4,300 mark, first time in history. Although we saw some correction after that, right, which we call technical correction after an aggressive bull run, and that is on the back of profit taking by traders. But still, despite of that, the gold has rallied 54% this year, outpacing stock markets globally. This is not just a coincidence. It's a signal of shifting trust, shifting capital, and shifting power. And it's only because gold has long been seen as a metal of beauty. But today it stands as a metal of strategy. And we will discuss some of that today. Well, myself, I tell you, so of my 35 years of banking, right, across 7 geographies, 4 continents, I would say, Middle East, Asia, Africa, North America. I have seen many economic cycles. But one thing has remained constant. Gold always prevailed, right, in all cycles. So the real question is, why is gold safe and dependable investment, and why it is perceived that way, right? So we need to understand that, of course, gold is not just a shiny commodity. It's the ultimate store of value. Across time and civilizations, gold has never defaulted, never gone bankrupt, and never been inflated away. When confidence in paper money wanes, gold appeal grows. It is globally accepted, and more importantly, politically neutral. It's a politically neutral commodity and instantly liquid. You won't find these characteristics in any other commodity, right? And especially for, of course, investors and policymakers in this room, these characteristics are invaluable, especially in a market where inflation and FX volatility can erode wealth overnight. The recent gold rally is driven not by speculation. It is being fueled by geopolitical uncertainty, US fiscal instability, and eroding trust in traditional safe havens. This is why gold today stands as a bridge between trust and value, making it indispensable for investors and central bank alike. Well, fine, it's stable, it's safe. We'll go one by one risk from angle. So does it provide hedge against inflation, and how and why? Well, we know that inflation is a tax on savings, which erodes your purchasing power. In the last 5 years, we have seen double-digit inflation, in many African economies, often outpacing returns on fixed income investment. Gold, on the other hand, tends to move in the opposite direction. When cost of living rises, gold prices follow. It tends to appreciate when inflation accelerates, preserving real value over time. Empirical data shows that during inflationary periods, whether in 1970s in the US or more recently during pandemic era money expansion, gold has protected purchasing power. This is exactly what we are witnessing now. In the middle of monetary easing cycles in advanced economies, investors are reallocating from currencies to gold. For Nigeria and other African economies, gold is not just a hedge, it's an inflation firewall. Gold offers a natural inflation insurance policy. Now, what about FX? Right. Currency risk is another big risk, especially for this region. Currency depreciation has been one of the biggest risks for investors in Nigeria. As Naira weakens, the value of gold in local terms rises automatically, making it an elegant natural hedge. What's important to note is that even when the US dollar is facing pressure due to political instability and concerns over Fed independence, gold is gaining strength. This means gold is no longer just a hedge against emerging market currencies. It's increasingly seen as a hedge against the world reserve currency itself. As Ray Dalio recently remarked, gold is now a safer haven than the dollar, and portfolios globally are being rebalanced to hold roughly 15 to 20% in gold. Well, another fact that we look around globally, right? Any asset category, whether it's real estate, stocks, bonds, fixed income, whatever, every investment category has propelled on the back of leverage, which gives you scale, right? So for investors in Africa, and Nigeria especially, who are holding local currency assets, FX risk is the biggest risk. For Nigerian investors and institutions, leveraging Naira borrowing to acquire gold can be a powerful strategy. And all the banks that Nere mentioned, FCMB and Sterling, etc., who are doing, that's local currency borrowing to buy gold. When Naira depreciates, the gold position appreciates, offsetting exposure, effectively creating a built-in hedge. Again, as I said, this is not just a theoretical model, but banks in this room have already done that. So these models can be scaled, definitely, to empower Nigerian banks and commodity exchange. And I will talk about commodity exchange in a minute. But even for retail and individual investors, leverage models drive savings and preserve purchasing power. How does this support central bank? Well, globally, central banks have been the single biggest driver of this gold rally. They have turned from net sellers to record buyers, a structural shift in reserve management. Why? Because gold offers, number one, reserve diversification away from volatile FX assets, an automatic buffer when local currency weakens, and three, protection against external shocks. For Central Bank of Nigeria, accumulating gold reserves can strengthen financial sovereignty and enhance the nation's reserve profile without dependence on external funding sources. And I'm glad to hear from Nere that they have already started. Now, what does this mean for commodity exchange? Well, commodity exchanges ecosystem actually is a critical piece of this puzzle. Globally, investors are pouring record funds into bullion-backed ETFs, creating deep liquidity in gold market. By integrating gold more into fully like platforms like Lagos Commodity and Future Trade, LCFE, number one, we can create transparent local pricing and credible benchmarks. Miners, refiners, and jewelers can hedge exposures. Banks can extend credit against gold receipts, turning the metal into a financing instrument. This transforms gold from a passive store of value into an active liquidity engine for the Nigeria financial system. I don't know how many of us know that Africa produces over 20% of world gold, but captures less than 2% of its financial value. We export raw and import finished wealth. Therefore, what is needed is what I saw this morning, right? Improving refinery and vaulting capacity locally. I think it's a great initiative which Key & Smith has taken. They have shown us even the space where they can expand the capacity, etc. So I think that's the way to go. Launching gold-backed financial products, which has already started by a few banks, as we discussed. Enabling cross-border trade settlements under PAPS and AFCFTA. Leveraging fintech innovation like SANU to integrate gold into digital platforms. With global central banks accumulation at record levels, and forecasts now pointing to gold hitting 5,000 by December 2026. This is the moment for Nigeria to position itself strategically. To truly unlock Africa's gold value chain, I think steps we all know what we need to do, right? Government, central bank, commodity exchange, investors should have an alignment. And it's great to know that Africa Gold Council has been set up and that process has started. Because every major hub, whether Dubai, Singapore, whichever you take, right, has succeeded on the back of policy alignment and private sector partnership and execution. The last time the world faced this level of uncertainty was in 1970s, when gold prices surged 15-fold and reshaped global monetary systems. Today, history is offering us another opportunity, right? Imagine Nigeria reserves are not backed by dollars only, but by gold too. Commodity exchanges drive regional liquidity. Miners, banks, and policymakers making Nigeria price settler. Because gold is not just an ancient metal anymore. It is a currency of trust, the hedge against instability, and the lever of sovereignty. We have to seize this moment, certainly. Gold is an important pillar for Africa's financial future. So, listen, I'll keep it short because, of course, we have a session to discuss more in detail about whatever I have said and whatever Nere has said, more in a Q&A format. So we will do that. But as closing, I would just take a look as a banker. What I can tell you is that gold doesn't require credit rating. It doesn't require bank guarantee. It passes all the stress tests. So to me, it's a perfect asset for leverage. Leverage provides a scale, and for retail investors and individuals, it forces savings. We have discussed all the qualities of this category of asset, right? Inflation hedge and FX hedge and all that. And if nothing else works, honestly, gift it to your wife. That will give you the highest return. Thank you.
So we'll move swiftly on now to the interactive on the keynote address. So this will be led by Bode Oyetunde from the AFDB, if you can come up. And then some of the other discussants would be Mohammed Mudassir Amray and Abubakar Suleiman and Bolaji Balogun from Chapel Hill.
Thank you very much. Firstly, Nere and everyone, what an incredible journey, and really excited to learn more about this story today. I think we have an incredible opportunity in our markets, and that opportunity is really around how can we firstly crowd in more capital to support the entire gold value chain in this country. And this starts, first and foremost with how can the markets be used to scale a business like the refinery next door and pretty quickly. But also, how do we begin to think of getting a company like Thor Gold actually doing a secondary listing in this market? Thor's had a remarkable history in London, but in London it's a relatively small listing. In these markets, it would find really tremendous support. And I think the way that we build more capital for this asset class is really around investor education, creating retail products, whether it's gold mutual funds or gold ETFs. We've had a gold ETF in Nigeria for a number of years, but I think that for a variety of reasons, firstly, because the plumbing doesn't work very well around ETFs in the market, and we haven't set up, the plumbing quite well. This product hasn't found, tremendous support and should have grown a lot larger, and other fund managers should also have created incremental, products. I do think one of the low-hanging fruits is getting mining companies listed on the exchange, because this is a market that has tremendous appetite for extractive type companies. We've seen the relative success of companies like Seplat, Aradel in the oil industry. I do think there's a huge opportunity there, firstly for mining companies. But what I think is really significant is to recognize that we have large pools of capital in this country. We have a pension industry today which is somewhere around $26 billion, has zero exposure to gold, should have, some exposure to gold, has minimal exposure, to FX, and effectively being exposed to gold is, exposure, to FX. And, one of the big things I will be pushing over the next, few months is how we get this metal and other metals actually into the investment allocations, for that large pool of capital in this country. I think the other opportunity is, for our commodities exchange, and, the timing was, quite right. The CEO of the exchange, has just walked in at the right time to begin to create products that very simple, unsophisticated investors can invest in. And these would just be investing in spot contracts, for gold. And over time, when people become quite familiar with the asset class, beginning, also to move them along the value chain into futures and options, contracts and other derivative instruments. The second opportunity we have in the market is that we have an incredible informal economy. And in many respects, I believe that Nigeria's informal sector is probably multiples of its formal sector. And when people think about our GDP, you think about this economy as a $300 billion economy. But all of the anecdotal and evidential evidence suggests that it's a lot larger. And when we see the increasing prevalence of capital formation, particularly around fintech businesses in this country, and we see the scale of customers at a business like OPay or a business like PalmPay, or the scale of SMEs at a business like MoneyPoint is beginning to reach, and the scale of liability generation that's also happening in those businesses, then we will understand that our biggest opportunity is actually in our retail, informal, segment of the market. And we have an incredible opportunity to crowd in really significant capital. And this is a part of the market that has always understood the value of gold. They've understood it, as a store of value. They've traded it informally. And I think this is where our biggest, opportunity perhaps is in terms of creating large retail products. I'll stop at this point.
Thanks so much, Bolaji. Just to build on what you just said, 2 points. First, I suppose as a money man yourself, you know that capital is a very shy animal, runs away from risk, runs towards rewards. And what do you think we need to do in terms of trying to get to a place where gold and investing in gold, precious metals seems less risky and more profitable, given the fact that a lot of the pension funds are invested basically in gilts, the surest asset class in the economy, government safety net in terms of the gilts and security and risk. And how do we deal with that sort of perception of risk going into gold as asset class, the other things that come with the fact there's not just a financial derivative, it's also a derivative that has an underlying ecosystem and derivative essential. That's one.
I think the first key investment for me is this refinery. I'm incredibly shocked that this has been done very quietly in this country, because, I think that, quite a lot more money would have been thrown at it, by a number of other people if they're aware of it. Standardization and effectively getting, Nigerian refined gold, accepted, globally, is really, really fundamental to this process. And we then need to create a plethora of products. These products have to be listed product, because I think that if it's unlisted product, the governance that comes, with, product being listed, the reporting obligations, the fact that, there are all sorts of control processes around listed products, like the use of custodians, trustees. All of these things just help to build that trust quotient. And the higher the trust quotient is in the market, the more liquid markets are. We've built, for example, in this country today, in less than 20 years, probably the deepest debt markets on the continent. This was not always the case. But by putting all of those foundational blocks in place, the most important foundational block, around, debt instruments doesn't apply with gold, which is credit ratings. By putting all those foundational blocks in place, by ensuring that, everything is done, within the constraints of a market, there's standards. People who behave badly, the market sanctions them. If you've ever defaulted, the next time you issue, the market doesn't support you. You build that really significant trust quotient, and that trust quotient is what then allows capital flow very, very quickly. And I think for asset-backed, instruments, there is, really no cap to how deep and liquid those markets can be.
And that leads to my second question, which you already started to address, in terms of how does the regulatory framework and the regulators manage the tension between innovation on the one hand and proper regulation and protecting the market. You've been around the block many years. 20 years ago with the margin trading, and how it became so popular, and then of course led to a bubble, and then it burst, and we now have the pullback and the overregulation, and of course the banking sector had to adjust, etc., in terms of splitting the risk-bearing assets, risk-bearing investment banking functions to the commercial minister. So how do we get that tension between innovation and regulation right to the commercial market?
I think the incredible opportunity we have is that this, commodity has been traded for a couple of 100 years on other exchanges and other markets. The standards, are fairly well set. We don't need to reinvent, those standards domestically. But, what is also really, really fundamental is to get a broader amount of participants in the ecosystem. Any ecosystem for any product, is, effectively built around the buy side, intermediaries, sell side, and I think one of the pieces of work that the Commodities Exchange needs to do is to get a much broader range of traders and participants in the market. Banks are now, willing to provide liquidity. I think investor education as well as ecosystem participant education is non-negotiable. This is the beauty of a fora like this. the more people that, understand the product, understand how it's traded, understand the structures of the market, understand, the risk management, the more, that capital will flow. I think the SEC, must very, very quickly, ensure that, they are elevating the broad rules that have been written, for commodity trading. But we must also ensure that pools of capital in this country, long-term capital in particular, pension fund money, insurance, life insurance money, are broadening their investment, guidelines that people can hold, small portions, in gold, in the same way that the central bank is beginning to, build up its reserves domestically. If Nigeria's pension industry was allowed to put 5% into gold today, that's already $1.3 billion, of capital in naira. That's 1.9 trillion, of capital very, very quickly that can go. And what an incredible impact that would have in mining communities, what an incredible impact, that would have in the entire value chain, in this country. And these are things that can be done in weeks rather than years and months.
Let me bring Amray into the conversation. I know you spoke earlier, and I'll start by telling a story told by your colleague and my colleague, Farouk Gumel. Who is you're one of your execs in the Chibu. And one thing working with Farouk for many years, I was always struck by was how imaginary some of our borders are, and how real some of the other issues are. So he had the example, of course, of him trying to get across from one country to another in West Africa, and being stopped by customs and having this and that check. And then Malam is driving with a little bicycle with the boat on his back. No borders. And the issue of trying to integrate into the African continent through a free trade arrangement. And then in this case, in terms of trying to get our gold standards and commodity trading space up to par, so that we're easily tradable across the continent and integrate into the world. And sometimes we have these barriers in terms of our regulations that sort of limit the way we can access other markets can access us. But at the same time, you need some level of regulation in terms of inter-country governance. So, asking you, having the size of your group and how you see Africa as a whole, at the same time, different countries, where do you think the right balance is to be struck between not complicating things too much, but getting the right sort of frameworks in place so that the markets grow, the markets integrate, and we get to a level where we can also interact, access capital from other countries, but we can also trade across boundaries. So.
Yeah, thank you. Yes. So listen, first of all, there is no perfect solution. We have seen in all commodities and all products, yes, you can achieve that kind of synergy that we are talking about, but it's still doing this thing. I think the right step which has already been taken is the African Group, which is like the right forum which will drive all this. But I would still say that this is a new phenomenon, or although this gold as a product and as an investment product has lasted for civilization. But this realization and the significance that you get is pretty new. Primarily it started from, I would say, 2022, right? One is the G7 seizure of Bank of Russia assets, right? That's when emerging markets realized that they need to diversify from top, right? And that's where this gold phenomenon as an investor class is growing. Because it has its own weaknesses as well. Although we have talked about all the strengths, which is say dependable inflation and FX rate. But it's still one, not weakness, but the limitation is that it's a non-revenue generating asset. So with all these qualities, will you invest 100%? Answer is no. You need to have a balance. Yes, this is a very good insurance policy, but effects and inflation. But at the same time, you need to have a portfolio which gives you return, which gives you growth, at the same time insurance also. So I think that realization has now happened all over Africa and globally as well. I think institutions, whether it is insurance, pension, central bank, etc., everyone is going for that balance. And that balance, as of now, I think it's 15 to 20% gold. Maybe you go 30 to 40% in more growth assets and 30 to 40% in more revenue. So this itself is driving demand. Now, the positive thing that I look at here in this context is that of course we have gold here. I don't know the capacity, how much reserves we have, but of course it's reasonable, decent. We have this refined now which has come on. So this is the right step. With this refined product, if we encourage and the local investment into this, both from corporate side, the institution side, and the retail side, that will drive. Because what you are providing is again we have currency and inflation hedge product to your people, individuals and other institutions. So this will drive automatically once this market is created, and as Balaji has said, you have to synchronize this through commodity exchange.
Hello, yeah. Through commodity exchange, and then you will see the real, I would say, growth in this particular category. Because every investment that you make, either individual or this, you need liquidity. You need transparency, right? Which comes through the listing products that he spoke about. So I think all of this, the good thing is realization has happened and work has started. So we will reach there.
So building further on what you just said, in terms of now trying to build the ecosystem, your group has invested hugely in the ecosystems and the communities in which you do your operations, where you grow your crops, etc. And this is a huge issue. I was speaking with Smail, I think last year in Morocco, and one of the key issues that they've had is just trying to be able to engage with the communities and move from that informal trading to now formalizing and then getting that structure up. And also making sure that it doesn't become a problem for the community in terms of environmental degradation, in terms of attracting militants and other attention from herdsmen, etc., the security side, and as well as creating meaningful jobs and also improving the livelihoods and the basic issues around the community's health education. It might be useful maybe from your perspective as chief, as you've really been very strong in doing this and backward integrating to communities. Sort of indicate what you feel may need to happen in these areas where you now start focusing on the attractive and beneficiation ecosystem.
Yeah. Thanks. So listen, of course, sustainability is one of the, strongest focus that we have as a group, right? And the commodities that we deal in, the products that we deal in, there is a very, I would say, significant value that communities provide. So of course we work with them, we provide whatever support, etc., that we provide with them, right? Now, in this particular aspect, of course, refining and mining, right? There are two things. Now, from a mining, refining is not that complicated. It's simple. From mining perspective, of course, that's a bit complicated. Now, I have not spoken on this topic to with Kian on this, but we know some of the challenges in these communities, right? Both from security perspective and from sustainability, from environment perspective. I don't think gold mining is as intense from an environment perspective as some of the other like oil, etc., right? So it is still manageable. Of course, from a security angle, it will be slightly more complicated. But listen, there is no other choice. And we were already doing it, by the way. So we were already doing the mining, but we were exporting. With this refining, the only thing is that we are now retaining the asset in-house, right? And providing that opportunity to your investors to invest in local currency in an asset which is benchmarked to foreign exchange, right? So I think I only see these positive steps already taken, and yes, of course, it will take some more time to refine it further. Yeah.
And then maybe going back to Bolaji, to take on the financial markets aspect of this. looking at other countries that develop some minerals, for instance, we have the diamonds in West Africa, now the blood diamonds, reporting around sustainability, environmental practices, supporting war efforts in conflicts, and then of course the whole regime around monitoring what are the non-blood diamonds and what are blood diamonds. What risks do you see and how do you think the markets are going to approach that, given that we have all the greater principles in terms of lending as well as governance around reporting and all that?
So I have a really cynical view of these. I always think that the OECD countries and China, set what I would describe as standards of convenience when they think about natural resources in Africa. And this is one of the reasons why Africa is unable to use its resources to deliver prosperity in on this continent. If people are hungry and battling poverty, then the reality of it is that the first instinct we should have as Africans is around how we can use additive value, an additive value in these communities to bring greater prosperity and to be less focused on what I would describe as the hypocrisy. Because when you and I talk about blood diamonds, these diamonds are traded by global companies ultimately. They find their way into global markets in spite of all of the noise and the hypocrisy. What is really, really fundamental is that this country, this continent, has no reason to be poor by any standards. Underneath, the soil in the center of this continent, and that belt starts from, Tanzania, Zambia, through the DRC, Angola, all the way into countries like Nigeria, going as far as, Senegal, probably sits, several $1 trillion, worth of minerals. The US CIA, as an example, estimates that underneath DRC soil, there's $24 trillion, of minerals at mining value. Now, what that means is that at beneficiated value, that could easily be more than all of the money that sits in global asset managers, which is somewhere around $140 trillion. Yet, 8-9 countries globally, have fomented instability there. And if you allow them in Nigeria, they would do the same, quite frankly. And there are 9 countries, who surround the DRC. So it's one of the 2 most significant countries in the world, with a land border. What do you want those 9 countries around them to do? It's like when you watch one of these discovery type channels, and you see a lion bring down buffalo or something, and then you see jackals and hyenas running around its food. Everybody sees that food. And what we have to recognize and to do is to ensure first and foremost as Africans that people will only be able to come and sit at the table and share in that food with us on our own standards, not on their own standards. And that simply means, first and foremost, that we have to be respectful of the communities from which this food is coming. The communities must be, a part of the prosperity that is derived. Security in most of Africa is fundamentally prosperity driven. The only way that happens is that we process, we refine, we mine these products on the continent. There's some products even in Africa where the market for it, the global market for it, should be sitting in Africa. And you talk about an agricultural commodity like cocoa. Why do we trade cocoa internationally? Why don't we trade cocoa in Africa, in an African currency? And the rest of the world has to come and buy cocoa, which 75% of the resource comes from 3 African countries, Ghana, Cote d'Ivoire, Nigeria. If everyone had to pay for cocoa in Naira, or they had to pay for cocoa, in Ghanaian cedis, what an incredible impact it would have on their balance of trade, on their balance of payments, what an incredible impact it would have on currency stability. So I think as Africans, we've now spent so much on school fees globally, and we've all now gone to school properly. We now need to wake up and fix, our current and our future reality. And this country, this continent, has no excuse to be poor.
Absolutely. I'm just wondering, before we end, if there are questions from participants to the panelists, before I now come back to their final thoughts. But just want to check if there are any particularly burning questions. I think we've got one there.
Good afternoon, everybody. My name is Goodwill Ofunne. I am the Managing Director of FISAS Limited. I'm part of the team. I've heard a lot about financial growth in Africa, in Nigeria. I want to ask, is there a way we can translate our education into an entrepreneurial education that will set the background for us moving away from grammar into business, and then utilizing the resources that Africa has for the betterment of Africa? Translating chemistry into business or physics into business is a skill that has to be learned. If I say to anybody, what is pH? What does it mean to my mom? It's difficult to say what it is. But the truth is, there must be a vehicle to translate our education, the education in Africa, into entrepreneurship. What should we do?
Thank you. So we've got one on skills and actual application skills, adaptation, etc. We've got a gentleman here in front. We'll take a few questions before we come back to them.
Good day, ladies and gentlemen. Mine is not actually a question. It's a comment on the standard phrase, standards of convenience. I think he's hit the nail on the head. It's something that is really, really on the forefront of discussions. So we're now dealing with the commodities end of it. I just want to make it known that a quiet revolution is occurring on the exploration and mining front. Our current Minister of Mineral Resources, Mr. Dele Alaki, has managed to form an African Minerals Strategy Group, which is composed of all the ministers of mining in Africa, and they are achieving giant strides in getting Africa to formulate its own standards. So, for example, in the old days, it was always either JORC or NI 43101, but now a Pan-African reporting code for minerals is in existence, and we hope to see it adapted or adopted across Africa, and whereby it's an African standard that we follow and not something that is dictated from elsewhere as a standard of convenience. Thank you very much.
Thank you, sir, for that comment. Can we move to that side to give one or two, and then we can come back? Going. Okay, that's one.
Thank you very much to the panelists. My name is Femi Babem from KPMG. We've said a lot about how gold should become the reserve currencies for central banks, and this is a conversation that has been going on for a long time. And the question I always ask is, it's impossible that regulators don't know about this. The CBN would probably know. So, is there some underlying factor that is really limiting the ability of the central banks or the banks to really hold these assets, as a reserve currency? Are there geopolitical threats, or what exactly it is? I think understanding what it is will help, then seeing what policy or what strategies can be used to then move forward.
Thank you very much. So let me come back to panelists.
So Mudassir will take this.
I'll take the second question. You take. That's not my area of expertise, right? Okay. So regarding this, to look, as I said, this reserve currency from CBN, right? Or not reserve currency is not the right terminology. Reserves, right? How do you build gold and include gold in your reserves? This realization has come more after 2022, when Bank of Russia assets were frozen by G7, right? So that's when emerging markets have realized. So this process has started already, right? Central banks globally, now the current rally that you have seen in this year is primarily driven by central banks across everywhere. I don't know how much CBN is buying, but definitely they have also started the process. It is definitely, it's a new asset class. So banks are taking it. Now, again, as I said, look, for example, if CBN has 43 billion reserves, right, $43 billion, should they buy everything gold? The answer is no, because you need a revenue generating assets as well. So there will be some balance to it, 15, 20, 30%, I don't know, whatever they have decided. But the process has started, buying is going on, which is driving this rally. And you will see by next year, or the year after, when you analyze the reserves, it will be very different. It will be a very balanced portfolio of reserves of especially emerging market central banks. So that process has started. Of course, there are complications in terms of physical vaulting, physical security, movement, logistics, then ETFs, paper gold, all of that. So that thing is going on, and as I said, you will see difference very soon. Thank you.
Thank you for that really excellent question. And I truly believe that two things will drag this country kicking and screaming out of poverty. Entrepreneurship is one. The second is innovation. What you then have to focus on is what are the enablers, for both of those. I think first and foremost, the simple approach that everyone takes is to throw money at entrepreneurship. So you have all of these pools of capital that are created for SMEs and MSMEs, or you have all the money in BOI, and so on that is created. But we very rarely ask ourselves how much of this is actually getting to the right places. And first and foremost, when you look at the Pillar 3 reporting for all the banks, it's pretty clear that they don't finance many SMEs in this country, probably financing 7-8% SMEs in their total lending. And the most fundamental thing that makes it difficult to finance SMEs is people look for collateral or you look for experience. And both of those things disqualify young people, and they also disqualify women. So we have to recognize the incredible opportunity, firstly, that capital markets and asset management vehicles can bring for creating long-term pools of capital that don't have the same risk weightings and issues that banks need to deal with, don't have the same credit ratings, that banks have to deal with, and the reason, why it's preferable to lend to larger companies. But we also have to recognize the incredible opportunity that really large businesses can play in what they do with their value chain. And excellent example here is what TGI Group, and really good to see in the audience Mr. Sabara, does with its value chain in agriculture. And through outgrowers schemes, effectively what are you doing? You're creating a raft of entrepreneurs in agriculture. You're creating a raft of people who own their own businesses. And something must be said for countries which have developed, very quickly from an entrepreneurial perspective. They built and encouraged a series of really, really large businesses who then use their own value chain, basically to sprout and develop innovation. The final thing that is really, really important is you cannot build an entrepreneurial culture if we don't have larger pools of domestic savings and investments. The pension funds, which are predominantly our only large pool of domestic savings and investments, by their nature have to be quite conservative. So one of the things that the government needs to think about is to look at models that have worked. And, after the end of the Second World War, the UK had a significant problem, with entrepreneurship and financing entrepreneurship. And there were two fundamental things that the UK did. One was to utilize, listed investment trusts in capital markets to raise a lot of capital, and you'll all, or some of you may be familiar with a business called 3i, which was really, the foundational vehicle used, to finance a lot of British entrepreneurship. But the second thing was also to create tax-free savings for individuals with ISAs in the UK. And ISAs today are, more than, 30% of the UK's GDP. And that's something which you can easily do in Nigeria, because there's a lot of money in informal. If you allowed every Nigerian every year to invest, up to say 25 million naira tax-free in the markets, what you're going to do is you're going to create a big pool of savings, and what those savings must be used to do is to finance small business and small innovation, and this is how, effectively you change a country and the course of its history.
Thank you so much. Just to add on for my bit on the 2 points. First, going to what Bolaji just said. African Development Bank, we're working closely with AFC, Afrex, and others. And what we've been doing is trying to focus on entrepreneurship, SMEs, and women. But it's difficult because, as Bolaji pointed out, the banks are geared to profitability and away from risk. So we do this through lines of credit. We give to Zenith, UBA, to GTB, to many other banks across the continent as well. And then also try and encourage them to also backward integrate and buy from local communities and build them. And that's, of course, similar to what she has been doing successfully. So that's something that needs to happen. The challenge, of course, is it's difficult in real life. Life is stochastic. Problems have real issues. And what we find is we are all chasing the same women entrepreneurs that are getting all the love and all the, because everybody wants to target them. But the others in the next generation are being neglected, and the issues perceive risk. And this is something we also have to think of how we can address. And I think this goes back to what I just said about skills and trying to get that sweet spot where you have the risk-reward trade-off balance. But you also try and work with people that do not have as much capital, as much experience. And through mentorships and other processes, you can bring these communities and these businesses up. And then the second thing is also back to what Amray said in terms of the inflection point for central banks. But the inflection point has happened, it's now beginning to bear because people were prepared. So I remember then when I was in another life working at the villa, presidential villa, when we had our 2017 budget implementation program. And we had Ken Smith, 2007, giving one of the 2 mining licenses that came out of a process we called labs. And it's a long road since then. If you talk to Larry and her team, they know what they've gone through over this decade. And while some people may see it was well kept secret, it's because they were really grafting in the darkness and coming to a place. And trying to see where we can get other businesses to come up through this ecosystem and then get part of that whole value chain so that a lot more beneficiation, a lot more value added can occur on the continent. And then we don't repeat for gold the mistakes we made for gold. So those are my 2 bits. I'll like to let my panelists maybe give their 2 key thoughts in terms of where we want to go and what do you think we need to be done immediately to get there.
I think first and foremost, using capital markets. Capital markets, when you understand their power, an incredible strategic weapon. And if you think of, the history, the culture of entrepreneurship in this country, the businesses that have sustained, that have survived, that have grown, to a large extent use capital markets. And capital markets doesn't mean listing. Issuing bonds is one of the easiest ways, to approach, capital markets, and this is an incredible opportunity to scale very quickly. Second thing, I would say is that in this whole process, we must have a very, very strong perspective on sustainability. And sustainability just means, building, thinking, financing, always with the future in mind. And if we have a long-term view and we're all long-term greedy in a value chain where there's a lot of money involved, I think that Nigeria and the continent will be the better for it.
Thanks so much, Balaji.
Great, thank you. So listen, Balaji has covered more from an institutional investor perspective. I would probably give 1 or 2 messages for retail, right? Gold is an excellent and exceptional asset for savings. For savings, even you have to leverage and buy gold, do that. You will not go wrong. I'll tell you, I'll close maybe on a small story, personal story, okay? But there's a very strong message in this. So my younger son is very financially savvy, right? And he's very curious, so he get into everyone what each family member is doing. So he has my entire investment portfolio. He looks at his mom wherever she is spending, and my elder son and brother and whatever, right? Just last week he told me, in our house, the smartest investor is mom, who is a housewife, by the way. So I said, how? She said, I have seen the MTM of her investment and she has the highest return. Because what she does is, while all of us, meaning financial kids, do property and do stocks and this, every time she has money, she buys gold and she never sells. She only buys. So the return that she has calculated. So basically the message is that this particular asset, and look the 30-year chart, 40-year chart, you will see a secular uptrend with technical corrections only. There is no downward trend. It's only technical correction that happens. Otherwise, graph is constantly up. Of course, no asset goes in a straight line. It's always this. So that's the message that, of course, we have to do, at an individual level savings and buy local gold. Now it's available in Naira, local gold. There's nothing like it. Thank you.